With the new laws that came out regarding student loans, there's lots of confusion, lots of action. On today's episode of Friends Talk Financial Planning, we're going to talk about 3 major mistakes that people make. And by the end of this episode, you're going to know how you can avoid them and make sure you're doing the right thing for your student loans. Hi, I'm John Scheer, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan Mermel, and I've got a family financial planning practice in Chicago, Illinois. And today we're going to be joined by a special guest. Please introduce yourself, Patti. So glad to have you here.
Hi, thanks for having me. I'm Patti Hughes. I have a fee-only financial planning practice, and I'm also out of Chicago. And I work with a lot of clients that do financial planning, but also have student loans.
Yeah. Hey, thanks so much for joining us, Patti. This is going to be really excellent. Looking forward to our conversation here today. Hey, before we get started, though, I want to dig into student loan planning, but I want to remind everybody to hit that subscribe button. By hitting subscribe, that helps you get updates. It helps other people find this great information on YouTube. So hit that subscribe button and let's get into what are these mistakes that people are making here, Patti, when it comes to this new student loan environment we're in.
So there's a lot of different things that have been announced. I mean, since April, they've had a lot of revisions with student loans. So one of the main things is there's a lot of deadlines that people aren't aware of. For example, for people who are pursuing public service loan forgiveness, they have to consolidate their loans by the end of October if they want to, be included in this PSLF waiver, they call it. And it's a really great program. And the waiver program basically says that you'll get credit for any of the payments that you made, regardless of what type of loan repayment program you were in. And even these old FFEL loans are included. So for a lot of people, this is a really big deal, but they're not aware of the deadline. So by the end of October, they have to consolidate their loans into a direct federal loan to be eligible.
And from that public service side of things, we're talking about people that work for nonprofits and government agencies, maybe schools, hospitals that are nonprofit. I mean, it's a pretty wide swath of people that should pay attention to this October 31st deadline, right?
Right. So it's not, a lot of people don't understand that it's not the job that you do, but it's who you work for. So in other words, if you work for a nonprofit hospital, if you work for a school, or if you work for government, these are the people that are going to be able to use this public service loan forgiveness. And a lot of people aren't aware of it, especially high income people, who are like doctors. They don't think they're included in this, but they are.
So I could be a hospital administrator or like in some sort of sales position in one of these non-for-profit organizations, but still be eligible for forgiveness.
Right. It's who you work for. So that's what a lot of people don't understand. So a lot of people are missing out on, taking advantage of these benefits.
So, and the other thing is that this program, even though there's been a lot of attention for the new program, this program is a little bit older. And so that's why this deadline is coming up right away in October.
Correct. And that's so this has kind of got almost swept under the rug with all these new changes that were announced. So this program, this PSLF waiver, they call it, this was announced like within the last year, but it's kind of been out of the press. So it's something that's really important because some people can either get all of their loans forgiven if they've got enough payments, to qualify. So that's 120 qualifying payments. But what this waiver is allowing you to do is even if you made a partial payment or if you made a late payment or say you made a lump sum payment, they're allowing you to get credit for all these payments. And this was never the case before. So it's really a big deal. And then the other thing is if your loans were in forbearance or deferment, for 12 months or more consecutively, or 36 months or more cumulatively, then those are also going to count towards forgiveness. So there's some good provisions in there that a lot of people should be aware of.
That's great. And I know, Patti, so in addition to the public service loan that, again, people aren't always aware of it, pay attention if you're working for a nonprofit, you might qualify regardless of income. I know that there's some things based on income or those income-driven repayment plans. There's a deadline for those too coming up, right?
Right. So the other one, well, the latest, the revision that was just announced, that one, that's the one where there's the $10,000 worth of forgiveness if you make under 125,000, filing separately, and then or 250,000 jointly. So then there's also some deadlines with that, because there's a, first of all, part of that whole new revision was that there's a final extension on the pause of the payments till the end of this year. So a lot of people aren't aware of that. They think that they're going to have to start repaying the loans, immediately, like in the next month or so, but now that's been extended till January 1st. And so the other thing is that with that one, that these loans, the loans that apply to that are only loans that were taken out prior to June 30th. So a lot of people aren't aware of that. And a lot of people are thinking, oh, I'm going to hurry up and take out a loan and it's going to get forgiven. So that's another misconception.
Yeah, that's super. Thanks. So we got some deadlines, right? Some deadlines coming up, October 31st, the end of the year. I know one of the things that we talked about before we hit record here was about refinancing, and we've got this sort of conundrum, as I see it anyway. Interest rates are going up, so there's some appeal in, geez, do we lock in at lower rates? But yet that's not always, and maybe not often, a good choice, right?
Right. So for people that do a lot of people are interested in right now in doing a private refinance because they're looking at interest rates going up and they're saying, well, I should just jump in and grab whatever interest rate I'm offered now. I'm thinking that they're going to go up and just refinance my student loans. But part of the thing that they don't realize is that you lose forgiveness on any of these income-driven repayment plans. So for example, if your income goes down, your payment's going to be a lot lower. Whereas if you do a private refinance, your payment is set for the term of the loan, if it's 10 or 20 years, whatever it is. So that's an important distinction. And then the other thing is if you do a private refinance, you can never go back to a direct loan. And so you're never going to be eligible for any type of forgiveness. So that's an important distinction. And one other thing is with the federal loans, you are offered forgiveness, well, complete discharge of the loan in the event of death or disability, where a lot of the private lenders don't do this. So those are some big mistakes that you really need to keep in mind.
Yeah. That's really interesting on that interplay of, as I'm listening to you talk about these, Patti, it's one of the big takeaways I'm taking from this conversation is that it's not simple. You can't make these decisions in a bubble, right? It's not, well, interest rates are going up, so I should lock in lower rates. Well, maybe, right? Or interest, there's forgiveness that's out there, so I should just never refinance. Well, maybe, right? It's this interplay of things, and like so much of our general financial planning work, right? It's not an event. It's a process, and you've got to adjust to the ongoing things, it seems like.
Right. And I think it's also important to run the numbers both ways, to look at, to get an idea. If you're thinking about private loan refinancing, I always recommend that people go on a site called Credible to get an idea of what your actual interest rate will be, because people are getting all kinds of things in the mail and they call me and they say, oh, I'm eligible, I can get like 4% interest. Well, then when they look at their particular situation, sometimes the rates are quite higher. And so I always say, log into this, like Credible is one of the sites that you can log into. They do a soft credit pull, and then you can get an idea of what your actual rate would be. Then it's important to run the numbers to look at what would your payments actually be over the life of the loan, doing a private refinance, and then look at these income-driven repayment plans. Which ones would you qualify for based on the dates of your loans? And then, some other factors like personal financial hardship. And then there's some other things to look at. But run the numbers all the ways, and then that way you're going to be able to make the best decision for your unique situation.
Cool. So the third thing that we were talking about also is that, there's been this whole pause during COVID that started in 2020 in March, but then there's a lot of people that have been like, I don't need a pause. I want to keep paying. I don't want this to keep going on forever. So the new legislation, or the new executive order, the new regime, let's call it regime. It's saying there's some opportunity for the people that have been making their payments during this pause. Can you talk about that?
Yeah, and that's a really big deal that a lot of people aren't aware. So for people that continued to make payments during this pause, and a lot of the people that did that were on standard repayment plans because they said, well, why wouldn't I do this? Because the interest, it was going to keep accruing through this pause. And a lot of people aren't aware of that. So since March of 2020, if you made no payments, the interest keeps accruing. So a lot of people said, well, I'm going to keep making the same payments that I was making because I've got the money and I don't want to have the interest, accruing on the balance. So they did this. But one of the things that they aren't aware of is that you can actually ask for a refund of the amounts that you've paid during the pause. So this really applies to people if, for example, their loan balance went under $10,000. If they want to get that maximum of $10,000 forgiven, they need to get a refund of these payments so the loan balance, shows higher, and then they'll get that amount forgiven. Like, let's just use an example. If somebody, for example, paid down the loan and then they've got like a $6,000 balance, at the end right now. So what they can do is they can get a refund. Say they paid 4,000, the loan balance goes up to 10, and then they get the full 10,000 forgiven, as opposed to getting 6,000 forgiven. So it is a really big deal. A lot of people aren't aware of it.
If they've asked for their loan to be forgiven in the meantime, I would assume they can still ask, but they were kept repaying. Now then they asked for the loan forgiveness. They could still ask for a refund of the payments that they made that were pre-loan forgiveness, but it's not automatic. Is that what?
It's not automatic. You have to contact your loan servicer. So it's definitely not an automatic thing, and it's not something that they're typically going to tell you about. So it's something that's why I think it's really important for people to know. I have a friend of mine whose daughter was in the same situation. She had student loans and the balance was, pretty low. And she's just like, I just want to keep paying on this and get it paid off. Well, then at the end of it, her loan balance was way under 10,000. So she will be able to ask for a refund of what she paid during this pause, and then she'll be able to get the whole 10,000 forgiven. So it's a really big deal.
Yeah, I had somebody that I know that also that's in the situation of they ask for forgiveness. It's actually been anointed. Oh, and this brings up another point, is that this was months ago. The website said, yeah, you're good. This will get forgiven. But the balance keeps showing up. It doesn't look like it. So can you address that situation?
Well, from what I've heard from different people is that there is a real backlog with all of these changes that have gone on. Really since April, they just keep announcing more changes. And so I think that's one of the problems is that, that so many things have changed that there is a backlog. But as long as you went through the proper channels and they say it's going to be forgiven, it will be, they're telling people just to be patient, that it could, take a number of months to get this done.
That's really cool. Now, we had a bonus idea too, since we're filming this in September of 2021. And so there's some people that haven't filed, or we're filming this in September 2022. And some people haven't filed their taxes yet for 2021. I know it seems like a long time ago, but they've got an opportunity to, just in case. Why don't you talk about that?
So what a lot of people don't realize is that when you're looking at that $10,000 of loan forgiveness, they specifically said, okay, we're going to look at 2020 and 2021 adjusted gross income. So that does not mean both years. Either year could qualify. If your income, your adjusted gross income is below, say, the 125,000 for a single person, in either of those years, that could qualify you for the forgiveness. So if you have not filed your taxes for 2021, it makes a lot of sense to try to get your income below 125,000 in whatever way you can do that. So a lot of people, if they're married, if they file separately for that 1 year even, then, say the one spouse has student loans and their income is below 125,000, they would be able to get forgiveness. So that's one strategy that you can take. So it would be just looking at the tax return and trying to come up with some ideas on how you can get that adjusted gross income below those numbers, the thresholds.
That's awesome, Patty. Thanks for that. This may be a good place to wrap things up. We had a bonus. We had the three major mistakes, right? We talked about thinking twice before you refinance your student loans. Pay attention to deadlines coming up, especially if you're on an income replacement plan or if you're in a public service loan plan. And if you've paid off, if you kept on paying loans during the COVID pause, consider getting a refund or requesting a refund if your balance is below $10,000 to make sure you maximize the forgiveness. And then if you're one of those that hasn't filed for 21 tax returns yet, think about that. There's our bonus plan, some really valuable things. I really appreciate you being on here, Patty, and sharing this with our viewers. You know, both Bridget and I, as you guys viewers know, are members of the Alliance of Comprehensive Planners. That's how we know Patty. She's also a member of ACP. ACP is a nationwide group of tax-focused, fee-only holistic financial planners. And if you like what you hear on our show here, visit acplanners.org to find an advisor in your area. And this is a good time to mention that both Bridget, Patty, and I are also work with clients all over the country. As you heard Patty say, she's fielding phone calls from all over the place dealing with these issues. Patty, for people that want to reach out to you directly, how do they get in touch with you?
The best way would be through email. So I have a website, Lake Life Wealth Advisory Group. So I have got a contact form on there, and that's usually the easiest way.
Great. Lake Life Wealth Advisory Group. We'll put something in
Yes.
the show notes. We'll put a little link there so people can reach that. And yeah, thanks so much again for being on here.
Thank you.
I'm Bridget Sullivan-Mermal, and I've got a family financial planning practice in Chicago, Illinois.
And I'm John Shearer, and I have a fee-only financial planning practice in Middleton, Wisconsin. Our guest today has been Patti Hughes. She has a fee-only financial planning practice in Chicago, Illinois. And before we sign off, let's remember everybody hit that subscribe button so other people can find these shows. Thanks so much, you guys.
Thanks.